Hello there. Yes, the European stocks, they are falling for the third day in a row. All of this follows, well, a rather dismal day in Asia. In fact, Tokyo's main market, the Nikkei, closed down more than 4% in the worst sell-off we haven't seen since June. It seems developed economies are following that slump that we are still seeing in emerging markets. The catalyst remains the United States and its central bank, of course, the Federal Reserve, and its decision to pull back on that big bazooka, the economic stimulus program. All that cheap money it's pumping, it's winding that down. Add to that fears of a slowdown in the world's biggest economy after weak US factory numbers, also car sales slumping, also China factory numbers not that great. Let's go straight over to Yannick Naud, who is a portfolio manager at Sturgeon Capital. Yannick, great to have you with us. Yannick, what's going on here? Because of late we've had really good US numbers. The UK's been growing, Europe's doing better, China's slowing, but China is still China. So a couple of bad numbers, investors go running.
Yes, I mean 2014 was anyway supposed to be the year of transition away from monetary policy into real growth in the economy. Obviously, the risk in this kind of scenario is the growth could, from time to time, disappoint, and we could have those market movements.
Yeah, but Yannick, can I ask you this? Many are saying, hang on, over the last year or so, the markets have been artificially higher because America's been pumping all that cheap money. All that cheap money ended up in the emerging economies and into markets. Now it's being pulled back, and we're going to see this kind of adjustment, I guess, a correction.
Well, it's correct that during 2013, financial assets had a terrific year. If we look at, for example, one of the worst performing markets this year, which is the Nikkei 225, it's down 14% so far this year. It was up 57% last year. So it's true that when valuations are very high, you need to see company having very good earnings and the economy growing very quickly to justify this kind of valuation. All in all, I'm not that pessimistic because I think all in all, in the US, we should see the economy growing by more than 3%. In the UK, the economy is stronger than expected. But it's true that there's a lot of pockets of disappointing growth, one of it being the emerging market.
Very briefly, is there going to be an adjustment period? I mean, once that cheap money goes, people are going to look at the growth in the US, the UK and Europe and go, okay, let's invest.
Well, I think, the communication towards the tapering has been very, very good. I mean, the Fed did a very good job in explaining the way they will reduce the money that they used to be pumped into the system. So I think that the expectation of investors now is really in line with what the monetary policy need to be done. Nevertheless, quarter by quarter, you will see big volatility in the market if people are disappointed with what they see in terms of earnings.
Okay, Yannick, short and sweet, we appreciate your time. Thank you very much. Merci. Yannick Naud joining us there.